the AK Option Trader, back at you again with another weekly video on the stock market analysis, interpretation, thoughts, anything to do with the stock market. So let's get started. Well, last week, if you followed me at all, you know I probably had a really good week last week, and yes, I did. I've been calling for some put plays, been calling for some selling, been waiting for that kind of action for quite a while, so it was nice to see it. It was great fun to trade it. Had a real good week. A lot of winning trades in a row. Then I tried to go long on Friday. I tried to go long twice Friday. I just had this feeling that things were stalling off a little bit, and I thought we sold a little too much on Thursday. Waited till the morning mess got over, and I tried to go long. Got stopped out of my Q's calls right away. Not right away, a couple hours in trade. Whereas if I had not put a stop in, I would have been fine. I would have actually had a little profit. But I put a stop, and I got called out. My spiders, I'm still long the spiders, and I'm going to show you why. Over the weekend, which I usually don't like doing, especially when I bought October calls. So I have October calls on the spiders. So if we have any move at all upwards, I should be doing good. They're in the money calls. So let's take a look and see why I'm doing what I'm doing. Crazy man. All right, here we go. So this is the VIX. I posted a few blogs on it this week. I posted on Twitter. Just kind of, I always watch VIX. VIX, first thing I'll talk about. So you can see here, this is just a jumbled mess, and we try to interpret it, try to figure out what's going on, and you kind of get an idea. But look at this. We've got clear signals now. We had a clear breakout. We broke out over this high, broke out over this mess, we broke out over this mess, broke out over this mess. We broke out strong, we broke out big. Okay, now what did we do? We retested this high of 29.58, 29.60. All right, right there. Tested it, pulled back. We could not bolt through it yet. My thought is this is probably going to hold for a bit. Maybe we'll come back down to here, somewhere in here. Maybe we'll come down just a little bit and blow through it. But I think for now it'll probably hold. If not, if we break through it, that's going to be very bearish for this market, and that's certainly a possibility. So we could break right through it, and that'll be very bearish for this market. But I'm thinking it'll hold. Maybe we'll come back down and take another run at it. So anyway, I just found it interesting. We're pretty much right exactly at that high there, making a little bit of a what we would call a double top on the VIX. So let's take a look at the Dow, shall we? Come on up, Dow. So the Dow chart, all right. If you look at the moving averages on here. Kind of consolidating here over the, see how wide apart they were, kind of getting closer here, and they're getting closer. Now we're all merging again, closer again. Could be for the breakdown. Nothing went completely south, okay? Everything kind of held a little bit. But you can see this move up here. You can see my support and resistance lines along the way. These are the lines I'm anticipating support at on the way down. This is one of them. This is a minor support on this uptrend. And you can see we did breach it, but we did hold, and this 20 moving average, or pardon me, this 50 moving average seemed to hold as well. So we're above the 50, or above this trend line. We've got support here that I think of as 9,400. All right, be pretty decent support area. I think these two will be actually a lot stronger. This 92.50 area and this 91.30 area will be stronger, and obviously 9,000 will be one as well, just because it's a psychological round number. Earlier I talked about possible head and shoulders forming here. You got a shoulder, got a nice head. We can come down here. We could come down to here, and then maybe form a head somewhere in here and come back down, look for that breakdown. If it's happening, everybody in the world will be talking about it, but you heard it here first, so just keep an eye on it. I mean, that could be what's going on. Very similar on the SPX. This is why I went long the spiders, is we had this candle here on Thursday, closed right on this long-term trend line of mine here. I thought, aha, this will probably going to offer a little bit of support. VIX, everything was lining up like it was over, everything was oversold, so I thought we might have a bounce on Friday. We didn't. We sold off in the morning, then we rally, got positive, things were looking good, and then we sold again. So I went ahead and held. I saw some support here. I saw some support at the 50. I saw some support at this area here, this 1,000, we'll call it 1,015 area. And I don't know if we'll bust back up above this, but it sure didn't offer too much one day of support, so it might not be much to play with. I wouldn't be surprised if we bust back over that right now. So that's kind of why I'm holding the spiders. It's not super strong, but it wasn't a huge position, and it's just it was a kind of a risky trade that I was looking at to make some quick big bucks on it. We'll see what happens. On the NASDAQ, you can see we formed a hammer here right above the 50. So we got a bottom hammer forming here. So things might be turning a little bit. So let's just keep an eye on this. We could see another similar candle tomorrow, Monday, something along those lines. I just keep an eye on this hammer formation. You saw the strong sell-off busting through too. I made these trend lines each way here just to see which one would offer support. Neither of them did. It blew right through them. Right through them and stopped right above the 50. We've got this long-term downtrend line right here that can offer support as well. Short-term, this should be minor support up here. This one should be minor support coming up. So, you know, I'm not too scared about it, but the candle formation is telling me that tides might be turning. We got a little gap fill right in here, and that's something else too. So I want to show you. Let's look at the Qs real quick. Like I said, I tried to go long Qs. I'm not going to pull up the intraday just because of the time, but you can see why. Here's my long-term trend line. Right above this, we hit it in the morning. I thought, aha, we're probably going to bounce off this, end up in here somewhere, which we did touch it. And if I hadn't got stopped out, I could have sold right there and been great. But I was a good boy, put a little stop in, and bang, they came out and tapped that stop and got me out of there. So anyway, I give it a shot. It was a small position, small trade, just for kicks. I thought I might be able to make a little something out of it, and I didn't. I got spanked. Spiders. You can see my support and resistance levels for that day that I was watching. And if I show this intraday, you'd see how they interact. Of course, daily, you just see a chart here. But again, here we are sitting on the 50 moving average. We're going to have this in the way, this 102.50. So I'm going to keep an eye on this. But I was thinking we might be able to pop on up here and maybe make a little bit on here. Furthermore, we had support coming down here. Once we reach 100 level, I think we're gonna. That's a psychological level, but that's gonna be 1,000 on the SPX. So we're gonna keep an eye on those things there. But anyway, so I'm going along, thinking we might have had a little more selling than most people anticipated on Thursday. Very little follow through on bad news Friday. I think most of the selling occurred on Thursday. So let's get into some charts real quick. Well, we still got a few minutes. Let's go ahead and start with AXP is the chart I'd like to start with. This is American Express Company. All right. Basically, you got a nice little, it's not a great, I'll give you that. It's not great, but I like it. It's a head and shoulders. You got a shoulders, a head with like a double top, another head, another close to double top, and then starting to sell off. Now, I've got 3 different lines here because it's really hard to see this one. So I got a level at 31.50. I think this is going to offer a little bit of support. And when that breaks, I think I'm going to go short this, considering that it's probably going to stall out here. So the better short would probably be the break of this line, and then you get a $2 to $3 move. Okay, so it's already broke through here. It's come back, retested this real nice trend line here. So a break here of this 31.50 would be a good entry point for that, I think. AZO. We're going to compare this AZO and O'Reilly here. So AZO is one I've been watching for a while. Had missed on earnings, did worse than expected, guided in line, nothing real great. Since then, it's been rallying up. You know, I thought maybe it'd come fill this gap. I don't think it's going to make it. It looks like this move's petering out here. If it does break above this, I wouldn't short it until it fills this gap. If this holds and we get a breakdown beneath this uptrend line, we did for a little bit but closed above it, a breakdown beneath this trend line here, I think it'd be a really good short for I don't know how far, quite a distance. And if you compare that to O'Reilly, which is another automaker, it already broke down, hit the 200 moving average, is offering support. I'd look for maybe a retest of this trend line and another breakdown if it breaks the 200 moving average. I think that'd be a heck of a short. Let's do a comparison here. I'm going to do PHM, and that's one I've been talking about for a long time. Okay, we went ahead and shorted that on the head and shoulders. This is PHM down here. Here's the head and shoulders right here that we shorted. Look at this great move. Great move. I would have been out right here. 1150. I thought, all right, that's enough. We're moving up. But then it kept on going, kept on going. Well, if you compare that to LEN, Lennar, right here, you can see this hasn't broke down quite to the effect yet, to the same percentage yet. So this level, the head and shoulders level, would be somewhere in here. All right, to 1650. It did break down beneath it. It's very indecisive today. A lot more selling. This one had a lot more rally. This one had not quite as much, but I think a lot more selling is possible on this. So I'd watch for a break beneath this 15.13 or something like that, and that would be a really good, real good area to go short there. I'm going to pause a second. All right, and finally we're going to finish with XOM. I ran out of time. I had a lot more charts to look at, and I get too long-winded. Y'all need to tell me to shut up. So this is one we've been watching for a while. It's kind of been in a range bound, kind of in a pennant here. You can see it moving up and down, up and down, up and down. The range getting tighter. Finally, we had a breakdown to the to the downside. So let's keep an eye on this, especially if we see it retest this. I think it'd be a really good short. If it comes back up and retests this, it could be a good short right here, right now. But this will be one I'm watching. Okay, so that's it for today.